Let's connect with Mr. Krishna Kumar, Managing Director with State Bank of India. Mr. Kumar, good morning. Thank you for joining us. Talking about the topic, of the ET Banking Summit, which is technology. Could you walk us through various technological innovations State Bank of India is planning to incorporate, and what could be your exact tech spending for this year?
Well, as you know, we already have about 24,000 ATMs which have been installed across the country for State Bank of India alone. And in the current year, say by March 2013, we should be in a position to install at least another a few thousands, a couple of thousands more. But then the delivery of these ATMs would be on the new model which has been now done by the public sector banking space, where there is a common supplier for different states across the country. So now those deliveries have started happening now, and the new models of the ATMs in the public sector bank would be on an operating expenditure model rather than on a capital expenditure model.
Mr. Krishna Kumar, hi, morning. Coming to a few bank-specific questions. State Bank of India took the market by storm when it cut rates aggressively a few weeks back. Could you tell us what kind of growth have you seen following the cuts in your home and auto loan rates?
Well, in the last few weeks, especially in the auto loan segment, we have seen a doubling of the number of loans being sanctioned per day across the various states. This is across each and every geography we are operating in, and not confined to a particular town or city. Across the entire country, we see a doubling in the number of applications received and loans sanctioned. And the same thing I could also say for the housing loan segment, especially in the last few weeks. The housing loan applications, especially after we have reduced the housing loan rate of interest and also the base rate, we find that the number of new applications coming in have also been increasing over the last few weeks. So I think it looks good for our retail book in the next few months. There would be a substantial growth in terms of the outstandings, I'm sure, as we go ahead.
So, Mr. Kumar, given the current slump in the corporate credit growth, are banks now focusing only on the retail side?
Yes, certainly the retail banking book would grow, but I'm not sure that the entire growth in retail banking can make up for the low offtake in the credit segment, in the corporate credit segment. But yes, the retail banking outlook is good. It looks good for us, and I'm sure that at least to a great extent, if not to all, we'd be able to, at least in the retail segment, have a sizable year-on-year growth on the credit portfolio.
Right, but given the perceived change in sentiment thanks to the reforms recently announced by the government, are you seeing any early signs of corporate credit demand picking up in the second half of the year?
There are some early signs in the sense that we find that the larger and the mid-sized corporates are coming forward for fresh approvals and fresh sanctions or even enhancements of existing loans. But then it's too early yet to predict or to conclude that there will be a sizable offtake in credit because of that. But yes, early signs are definitely visible in the sense of fresh applications coming in for fresh credit.
Mr. Kumar, a number of banks are also coming up with festive offers. Would you be looking at any such moves, or it is difficult for State Bank of India to cut rates further because you were the first one to move, and currently your lending rates are one of the lowest in the system?
We are looking at it, but then as you said, we are probably now at the lowest end in terms of the rate of interest we charge on the housing loan and the auto loan. And with our base rate at 9.75%, we are charging just 25 basis points over. That is 10% for a housing loan up to 30 lakhs. So the scope for further reduction in the rate of interest in the current circumstance may be slightly limited, but we'll take a look at what we can do on this.
Right, Mr. Kumar, give us a sense of your asset quality. Has the situation improved or worsened of late?
Well, the quarter ending September is just over and the auditing process is starting, so it will be too premature to comment on the what has been happening on the non-performing assets in Q2. Hopefully there should be some sort of improvement in the situation, but then I'd not like to say much more because the audit would still be under process.
Mr. Kumar, at a time when State Bank of India has cut both lending rates and deposit rates and credit offtake is under pressure, will you be able to protect your margins for the current quarter? Because what you reported for the quarter gone by was certainly higher than the industry average. It was at about 3.8%.
Hopefully we should be able to retain the margins at the same level, but then as I said, the auditing is going on, so it will not be proper for me to comment on that.
Right, and finally, Mr. Kumar, given the kind of moves we are seeing from the government and the pro-growth sentiment in the economy, do you see any scope of the RBI to cut rates in the upcoming policy statement?
Yes, looking at what has been happening in the last few days and a couple of weeks, I would personally say there's a good likelihood, a strong chance of some rate cut going down at the end of this month. But let's wait and watch.